Hello and welcome to CryptoWeeklies. My name is Josh. Today on this video we are going to discuss Ethereum at length. On the channel we like to discuss cryptos and create its AI based forecast, retirement model, regression based forecasts, as well as dollar cost related strategies, but none of the content on the channel is financial advice. Now that we have the disclaimer, let's go ahead and get started with the AI based forecast for Ethereum. This is trained on machine learning models such as ARIMA, LSTM, and XGBoost. We had trained this model on 16th of June, about 15 days ago, when the price of Ether was slightly above 3,000. Today, the price is at around $3,013. Back then, the price was at around $3,500. But for July, the first week of July, that is ending on July 7th, the theoretical floor that we had forecasted was 2,915 in a bearish event. Bitcoin and wider crypto market had a bearish event in over the last 1 or 2 weeks, but still I wanted to update that the 1 standard deviation support or the 1 standard deviation look back has not been breached yet. So we are still within this 1 standard deviation confidence level bull case and the bear case. Right now the price is closer to the bear case, but if the market were to go back and have a sideways affinity, then in that scenario Ethereum could still per our AI based forecast could still be between $3,600 and $4,000 between now and November of 2024. On the other hand, if markets were to have a rally similar to what Ether did starting October, November 2023 to about March of 2024, the machine learning based forecast in that scenario would be price action between $4,300 and $6,500. So that is those are the bounds of 70% confidence level forecasts. The purpose of this forecast is not to say what will happen to the price tomorrow, whether it will go up or down, but making us aware of where is the 70% or 1 standard deviation support and resistance going forward. This is you can look at it and say that if per the forecast, if the price is closer to the bottom, that means the likelihood of falling further down is lower than likelihood of going back up. So just a brief update on that. In terms of today's sentiment and narratives, you can see this is scraped out of various sources across the internet related and content related to crypto. Most of the articles and discussions on YouTube are bullish, although there are certain bearish narratives such as Bitcoin going to 40k and then is Bitcoin going lower. The key idea over here is the y-axis is the confidence percent, the likelihood of it being bullish. If the length of the bar is high, that means the likelihood of that narrative to be bullish or bearish or neutral is high in reality. So most of the in terms of overall sentiment, again, although the fear and greed index over here is pointing to 37 fear, the social sentiment, at least on YouTube and the other reputable social networks, the sentiment is bullish, about 83% or 83.54% bullish over here. In terms of looking at the PeakValley analysis, the latest risk score is at 0.17. So risks have plummeted a lot. The key idea with this is whenever the market throws you an opportunity of low risk, such as over here when the risks were below 0.1, the last time we visited this level was in November of 2023, or if the recent risk level, the second lowest risk level between 0.1 and 0.2, the key idea is if we are in this territory like we are today, this is the time to dollar cost average in the market. This is historically speaking and taken out of the price action for the top 100 cryptos by market cap and analyzing their volatility, alpha, beta, as well as risk adjusted return and percent drawdown to analyze which zone of the market we are currently in, and what historically those zones point to. So for example, the green zone that we are in the low risk zone, we had the similar risk in May of 2022, just before the June 2022 bottom. Again in August of 2022, just before the last quarter of 2022 bottom. Similarly, the last time we spent a significant time in this green territory between 0.1 and 0.2 risk, we had a major rally till about March of 2024. So again, look back into these green zones and the blue zones. Those are the time to get into the market. And again, similar at the opposite end of the spectrum is when the market presents a highest risk opportunity, such as in May of 2021, when the risks were above 0.75, or during November 2021 when till about December 1st of 2021 when the risks were significantly high. That was the time to get out of the market. So this is again one simple way to understand where we stand, and it takes into account time factor, also the risk return profile for the top 100 cryptos by market cap. So that's where we are in terms of the popular narratives over the last 7 days. This is again looking at the popularity, if there is an increase or decrease. Bitcoin is back up to be the number one narrative. Over the last 24 hours, Bitcoin's presence on this narrative word cloud was diminished. Solana bullishness as well as altcoins have garnered most of the attention over the last 7 days. Some of the news related to Coinbase as well as Polkadot, and the general sentiment, although Ethereum has the presence of Ethereum on this wall has diminished, but there have been a lot of discussions related to Ethereum as well. One of the narratives which was popular over the last month was ETF, but the popularity of that narrative has gone down. Another some of the other altcoins such as XRP, their presence has diminished, as well as we see new and upcoming altcoins such as Algo, which is I think short for Algorand, as well as Cardano and other cryptos such as Solana are over here. Again, those are and the size of bullishness on this wall is significantly higher than the bearishness. So that means again, at least on YouTube, the discussions around crypto are more bullish than bearish. So this is where we are in terms of narratives. Let's look at the last heat map over the last 24 hours. It's all green. You can see thanks to the bounce back of over the last 24 hours, most of the cryptos are having a decent performance. But if you look at the last 7 days performance, only barring this is Tron, everything else has been down. The last 30 days, also certain exceptions, Tron, Caspa and Toncoin, everything else is red. And over the last 90 days, this is a similar story for Caspa and Toncoin. Although if we were to normalize all the performance over the last 4 key time periods, the crypto of the day is Tron. Previously it was, I believe, Caspa and Toncoin who had the most time spent as a crypto of the day, but today we have Tron as the crypto of the day for the first time. Looking at the SMA risk, which is again Bitcoin and Ether, where do they stand in terms of their price, the difference between the price and the simple moving average. This is normalized between 0 and 1, and the current risk band is for Bitcoin and Ether. We can see over here both of them are between this 0.2 and 0.4, which is the low risk territory. Again, not as low as the blue zone that we saw in the PeakValley analyzer. Ether is at around 0.3 risk, and Bitcoin at around 0.2. This is normalized between 0 and 1 in increments of 0.2. So lowest risk, if Bitcoin were to have a more of a pullback in this week or the next week, we might see an entry in the lowest risk zone. We do spend significant time when we enter this lowest risk band, and at that point, dollar cost averaging at that point makes the most sense. We can look at the for today we are looking at Ether. We can look at the risk color based approach. So for example, right now we are for Ether, we are in the risk regimen where the risk for between the price and the 20-week moving average is not as less as it was in July of 2022. If we zoom a little bit over here, today we have data for July 6th. The risk level is at around 0.31, slightly higher than Bitcoin, because if we were to go to Bitcoin over here and look at the risk score over here, Bitcoin is at around 0.21. So definitely both of them are in the same risk band in terms of the SMA approach, but again Ether is slightly higher in risk than BTC at this point in time. In terms of the regression analysis for Ether, you can see over here Ether has fallen a bit below the fair value polynomial regression band. The price of Ether right now at around $3,000 for this week, and then the fair value at around 3,550. If Ether were to, let's not go to the 2 standard deviation bull case and bear case, if Ether were to spend time within these 1 standard deviation bands, the key levels to look for are if the market were to crash significantly, is the $2,100 level, which is the bear case scenario, and the bull case scenario 1 standard deviation is $5,600. This level, and if we compare this level with the AI based forecast, they are not essentially the same, but in the similar zone between 5,500 and 6,500 to the upside, and to the downside the $2,000 level. So the AI based forecast says that it's looking slightly more bullish than the regression based approach. In terms of dollar cost averaging related strategy and DCA related forecast for the dollar cost averaging strategy, this points to a new model that we have developed, where we're looking at the polynomial regression function and also wrapping the price in such a way that based on the distance between the price, we have normalized a risk score based on how far is the price on this regression function, and if it's substantially lower, and this is proportional calculation, so that doesn't mean that what it was, a difference between $300 and $600 was about $300, but now this is again over here between $115 and $350. This gets calculated proportionally, so that means it accounts for any appreciation in price, and also has a time factor to it, where what was low risk in 2020 would be slightly high risk in 2023 if the prices were to fall at the same level. So this is our latest model, our most effort driven model, you can say, in terms of analytics. We also have a future regression trend line added to this using the historical data as an input, but again this is not machine learning based model, this is a regression based analysis. Over here we look at the price of Ether today coming in at around the last we checked it's around $3,010. The risk level per our analysis over here is at 0.26. Again, most of the analysis is telling a similar story. The price is at a fairly low risk, but not as low risk as it was in June of 2022 when the risk level was at 0.12. Again, the key idea with this is you can toggle, and all of the content is available on the website. The link is on the bottom if you see your screen, and you don't have to sign up or pay for anything. So with this I would like to conclude the video. If you are interested in looking at the future peak regression based forecast, if the trend were to continue till about December or November of 2024, if we were to go to 2 standard deviation mania phase, if that is in 2024 or 2025, per this analysis the Ether could see at around 14 to 15,000 level for this bull run. So with this I would like to conclude the video. Hope you like this content, and if you did, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.